Look, there's been some losses and I expect a lot more losses in Q3 from the oil tanker companies. Hey everyone, so today we're doing another update on the oil tanker thesis because we've got the results in from a lot of the oil tanker companies. If you've been following my channel for a while now, you'll know that I have an investment in the oil tankers and we're waiting for the thesis sort of to play out here. So I won't go into the details of what the thesis actually is. You can go back and watch a previous episode on that, but we're going to do the update today. Now, if you haven't subscribed to my channel yet, well, I recommend you do if you want to keep up to date with this thesis because I'm going to be tracking it over the next year or two. And if you got something out of this video, if you could hit that like button for me, it does help my channel grow. And with all of that out of the way, let's get into the video. Okay, so the main topic today is we're going to be talking about TK tankers, DHT and EURN specifically, because they're the ones I've invested in. And we're really going to be touching on why these are sort of the darkest days at the moment. So at the moment, the world oil demand is about 94.6 million barrels per day. It's about a 1.1 million barrels per day increase from the previous quarter, but it's slower in Asia, and that's the main tanker destination. Now, the issue is that OPEC are keeping the production levels low. And look, oil is better value in the Middle East than from North America. So that distance between the Middle East and Asia is obviously shorter. Therefore, the oil tankers aren't getting the higher rates because of these longer journeys. They're really only doing short journeys. So look, 20 out of 22 new builds are scheduled to hit the water. Well, we're scheduled to hit the water in the first half of 2021. So they've already hit the water. So that's actually a good thing. It means that there's only going to be 2 more new builds for the rest of the year coming on in the next 6 months. So the supply side is going to be kind of pretty stable for the next 6 months anyway. Everything is just working against the oil tanker market right now, and it looks pretty bad for the industry in the short term. What's ahead for Q3? Well, actually darker days. See, the longer this pandemic thing hangs around, the lower the demand for oil is going to be. And look, cases in a lot of parts of the world, like Australia, for example, are still out of control. And Q3 is actually the weakest season, generally speaking, for oil demand and tanker rates. So look, there's been some losses and I expect a lot more losses in Q3 from the oil tanker companies. So that's the short term. So now let's turn over to TK tankers specifically. Now for Q2, their results came in like this. Their book value was down from about a little over $1 billion to now about 900 million. So that's a 13% decline. They made a $130 million loss for the quarter. The free cash flow loss was about $15 million for the quarter. Q3 is not looking very good, like I said before. Now, I think that TNK might need to raise some debt or sell some assets to get through the bad part of this cycle. It's going to be a very tough year ahead for them. And look, short term, it's about as negative as it's going to get. Now let's look at DHT. Now they've fared a little bit better. They actually made a profit of $13.6 million, but only because they sold 2 of their really old ships. They did acquire 2 ships earlier, so they still have the same amount of ships on the water, but they did just sold 2 in the previous quarter. Steel rates were really high, so they got a really good price on these old ships that they were getting close to that 20-year range. So it was probably a pretty smart move, really. Their book value has gone down, but not as dramatically as TNK. It's only down about 2%. Look, Q3 just not looking good. They're expecting about $1 million profit, so it's about break even for them. Because they're going to sell a ship as well in this period. And they're unlikely to raise debt in Q3. Their balance sheet is a lot better than TNK from a debt point of view, just because they've got this old ship that they just sold and that rate, they kept the money coming in. Okay, now let's move over to EURN, and their book value has actually gone down about 10%. They have made a $160 million loss for the quarter. And when their earnings came out, they'd already booked in of nearly half of the days for Q3, and they're only booked it at about an average of $8,000 per day for the VLCCs. Now that's actually below their break-even level, so they're going to make a loss in Q3. So again, short term's about as negative as it can get. Medium-term tanker market though, they are saying that it is looking positive for them. The supply side and the demand side, the next year or 2 is looking positive. Now, all 3 CEOs did talk about that, well, yes, it's very difficult right now, but they are positive on this medium term. So they say that demand for oil is set to improve by the end of the year to around about 99 million barrels per day. That's very close to what it was pre-pandemic. OPEC announced that it's going to increase the supply of oil by 2 million barrels per day from now and onwards. So that's really good signs as well that demand is picking up. And the fleet supply, so the fleet of all of the tankers in the water, the fundamentals are very strong for the future. See, new builds are very expensive at the moment with the very high steel prices, and container ships are in really high demand. So the new builds of these container ships have filled up all the shipyards apparently to 2024. And scrap rates, so disposing of one of these old oil tankers, are actually at 10-year highs. So there's 6.6 million tons of capacity has already been scrapped this year. In 2020 and 2019, there was only 3.5 million tons scrapped for each of those full years. So they've already doubled it, and it's only halfway through the year. Now, if you're interested in how I actually do buy my shares, well, I go through a brokerage account called Interactive Brokers and Saxo Bank. Now, for Interactive Brokers, there's a link in my description, and you can try a demo account to get a feel for whether you like how it works. I have some example videos here on my channel as well, which will talk you through it. So I think Interactive Brokers is good because of the low exchange rate fees. If you're moving from Australian dollars to US dollars or to yen, the exchange rate fees are really good compared to all the other brokerage accounts. They don't have any monthly fees anymore, and I think they're one of the safest in the world because they've been around for decades. All right, let's go back into the oil tanker outlook. So with an increasing demand for oil in the world, plus a limited supply of oil tankers, the investing thesis still looks positive, as long as the companies can stay strong through these dark days. This is a very intense cycle. We are somewhere near the bottom of the cycle, and it is looking like we are going to get out the other side, but I'm not sure how many are going to survive. So here's my plan. I'm going to ride the roller coaster, hopefully until 2023. And I'm only going to sell any of these tanker companies if one of my absolute favorite companies gets to a really silly price that the upside is just too good to refuse. Well, and I really want to load the boat on that company. Let's say, I don't know, one of the companies on my watch list gets hammered for whatever reason, and I just need to put all my money into that business. Well, I will sell my oil tankers in that situation. I don't want to, but I will if that's the situation. What I really want to do is I want to learn the lesson of going through this cycle and actually following through on my thesis. So can I actually stomach this cycle? That's what I'm going to be testing myself. So that's why I'm aiming for 2023. I want to see if I've been an idiot for investing in a bad cyclical business that is going through a rough period and hopefully going to come out the side and make me a lot of money. I want to see if I'm an idiot for doing that or whether that was a smart idea. I'm not sure yet. I kind of need to test it out. And I want to just give the thesis a chance and understand that sentiment and cycles do change. The thesis makes sense. We just need oil demand to return to these pre-COVID levels. And another thing that gives me a little bit of conviction is that Michael Burry has actually a really big stake in another tanker company called Scorpio Tankers. I like Scorpio Tankers as well. I just think they have a bit too much debt, but it means they're going to make a lot of money when the good times are good. So I'm going to hold my tanker companies, hopefully, as Michael Burry is going to hold his position in Scorpio. And I think he sees this cycle playing out just the same as I do. I guess we'll have to just wait and see. If you enjoyed this video, if you're waiting for the next one, make sure you subscribe before you leave, and I will see you next time.